Hey everyone, welcome back to the channel. If you're new here, we talk about crypto, macro, and money moves the rich don't want you to miss. If that sounds like your thing, make sure to hit subscribe and click the bell so you don't miss the next video. Today's topic, Robert Kiyosaki, $2.25 million in Bitcoin, and what could make a hardcore BTC bull change his strategy overnight. Quick note before we dive in, this video is for education, not financial advice. Always do your own research and never invest money you can't afford to lose. Alright, let's get into it. First, why do people care what Robert Kiyosaki does with his Bitcoin? This is the guy who wrote Rich Dad Poor Dad, one of the most famous personal finance books ever. He has spent years warning about US debt, inflation, and currency collapse, and in that story, Bitcoin is the hero, the escape hatch from a broken system. So when someone like that reportedly sells millions in BTC, it sends a signal. It doesn't just move headlines, it changes sentiment. Because most retail investors don't have teams of analysts, they lean on voices they trust. And Kiyosaki has been one of those voices saying, buy Bitcoin before the crash, hedge against the dollar, use crypto and gold to protect yourself. So a $2.25 million Bitcoin sale raises three big questions. Is he changing his view on Bitcoin itself? Is he just taking profit and managing risk? Or is this about something bigger in the macro picture that we're missing? Let's unpack all three. Before we assume he's anti-Bitcoin, now, we need to understand something about how wealthy investors behave. When you or I invest a few hundred or a few $1,000s into BTC, selling feels emotional. For high net worth investors, it's mechanical. They think in terms like portfolio allocation, how much of my net worth is in this one asset? Risk exposure, if this goes to zero, am I still fine? Time horizon, is this a 1-year play, a 5-year play, or a forever hold? So a $2.25 million sale might sound like a full-on betrayal, but it could be rebalancing after huge profits, moving some funds into another opportunity, managing tax obligations, or just taking chips off the table after a big run. You ask yourself, if your $50,000 in Bitcoin suddenly became $250,000, would you really never touch it? Or would you maybe sell a piece, pay off a house, start a business, or diversify? Now scale that mentality up to millions. That's likely part of what's going on here. But there are deeper reasons someone like Kiyosaki might sell. So, what could make a long-time Bitcoin bull change his positioning overnight? Let's look at a few big macro levers. 1. Interest rates and AMP, liquidity. When interest rates are low, cheap money flows into risk assets like tech stocks and crypto. When rates are high or uncertain, big investors often rotate out of risk and into things like short-term bonds, cash equivalents, income-generating assets. If Kiyosaki believes we're heading into a period of tighter liquidity or more volatility, selling part of a risk-heavy position like BTC is perfectly logical. Regulatory pressure. Crypto lives and dies by regulation and headlines. New lawsuits, ETF approvals or denials, tax rules, or global crackdowns can all change the risk-reward profile overnight. If there's a wave of regulatory uncertainty building, a big investor might say, I still believe long-term, but I'm not riding this entire storm at full exposure. 3. Cycle timing. Bitcoin doesn't move in a straight line. It moves in cycles. Accumulation, run-up, euphoria, crash, boredom, repeat. Someone who's watched multiple cycles may decide, this leg of the cycle looks overheated. I'll sell into strength, then reload when everyone else is scared again. That might look like a bearish dump from the outside, but from the inside, it's just cycle trading on a multi-year scale. Now let's talk about something people often forget. Rich investors don't fall in love with assets. They fall in love with options. Having cash on the sidelines is an option. Owning real estate is an option. Owning Bitcoin, gold, or businesses are all different bets on the future. So why might someone like Kiyosaki trim a $2.25 million BTC position? Reason number 1, Concentration risk. If Bitcoin grew into a huge portion of his net worth, he may simply be reducing concentration. There's a saying, concentrate to build wealth, diversify to protect it. You go heavy into your conviction plays on the way up. You diversify once they've made you life-changing money. Reason number 2, funding other plays. Maybe he sees distressed real estate, cheap stocks, or private deals that he believes will outperform Bitcoin in the next 3 to 5 years. To act on those, he needs liquidity. Crypto is one of the easiest places to tap that, especially if it's in big profit. Reason number 3, sleep at night factor. Risk isn't just numbers on a chart. Risk is, can I sleep at night with this exposure? If the volatility of a multi-million-dollar BTC position no longer matches his personal risk tolerance, especially as he gets older, selling some is rational. That doesn't mean he hates Bitcoin. It means he values peace of mind as much as upside. Alright, let's address the big emotional question. Does selling mean he no longer believes in Bitcoin? Not necessarily. Belief in the story and technology is one thing. Position sizing in a portfolio is another. Think about it, you can believe electric cars are the future, and still sell Tesla stock after a 300% run. You can believe AI will transform the world, and still take profits on an AI ETF. You can believe Bitcoin is digital gold, and still sell part of your stack when it's up 5 to 10x. The mistake a lot of retail investors make is equating conviction with never selling. But professionals treat every asset the same way. What is the risk? What is the reward? What else could I do with this money right now? A sale doesn't always equal, I was wrong. Sometimes it just means, my situation changed. So what's the takeaway for you watching this video? Let's turn this story into a playbook. Lesson 1. Stop worshipping gurus. It's okay to follow smart people. It's dangerous to copy them blindly. You don't know their total net worth, their other assets, their risk tolerance, their time horizon, their obligations and goals. A $2.25 million sale for him might equal a 2% portfolio adjustment. For you, it might be your entire life savings. Use influences as sources of ideas, not substitutes for thinking. Lesson 2. Have your own sell rules. Most people only have buy rules. They get excited, ape in, and then have no plan if the trade works or fails. Ask yourself right now, at what price do I take partial profits? At what price do I cut my losses? What percentage of my net worth am I comfortable putting into one bet? Write those down. If a millionaire can sell after a win, so can you. Lesson 3, separate story from strategy. Bitcoin story, inflation hedge, digital gold, freedom money, might stay the same. Your strategy, how much you buy, when you sell, how you manage risk, should evolve as your life changes. Got a family now? New business opportunity? Moving countries? Those are real reasons to adjust, even if the Bitcoin thesis hasn't changed. Now let's zoom back out. If a big public figure trims a large BTC position, what could happen next? Short-term volatility. Headlines trigger emotion. Some people panic sell. Others front-run what they think is the smart money move. You might see a spike in volume, fast moves up or down, and lots of drama on social media. Medium-term reality check. After the noise fades, the market goes back to the basics. Network adoption, on-chain activity, halving cycles, macro liquidity, institutional demand. One person's trade, no matter how famous, doesn't rewrite Bitcoin's entire future. Long-term opportunity. Every time fear dominates the narrative, two types of people emerge. Those who panic, blame, wails, and exit at the worst time. Those who zoom out, stick to their game plan, and accumulate when it fits their strategy. Your job is to decide which one you're going to be. Let's turn everything we've talked about into a simple framework you can act on. Step 1. Clarify your why. Why are you in Bitcoin or crypto at all? Quick flips. Long-term hedge against inflation. Belief in decentralized tech. Your why will determine how often you buy and sell. Step 2. Map your risk. Write down your total investable capital, the percent you're willing to put in crypto, the percent you're willing to put in one coin. If a 50% drawdown would ruin your life, you're overexposed. Think. Interesting. What does he see that I should at least consider? How does this fit, or not fit, my plan? Use their moves as information, not as commands. So, did Robert Kiyosaki really dump Bitcoin because he lost faith? Or did he do what wealthy investors always do, take profits, manage risk, and reposition for the next big move? At the end of the day, that's less important than this question. Right finger, what are you going to do with your portfolio, your risk, and your opportunities? If you got value from this breakdown, do me a favor. Smash the like button so more people see this video. Subscribe if you want deeper dives into crypto, macro, and wealth building strategies, and drop a comment below. Do you think selling millions in BTC right now is smart, or is it a mistake?